have to be a financial expert to know that Canada and Mexico have to make a deal with the United States. They don't want a trade war with the United States. But where I agree with our other guest is with respect to the fall, we think about September volatility, historically challenging period of time for the market. Midterm elections, throw in unresolved issues around China trade. That is the elephant in the room here. That's the one that's really going to catch this market. I mean, who didn't think we were going to make a deal with Canada and Mexico? Of course we're going to get it resolved. But China, you have a president for life. That is an issue. That's a big elephant, and it's a huge elephant that the market is going to have a tough time swallowing coming into the fall. So, of course, the domestic economy remains very strong. Consumer confidence, you look at small business confidence, you look at the GDP revisions, all of which are really supportive. All of that goes right out the window if this China deal gets prolonged. The trade war is one issue. The president's war on big tech is a whole nother animal that this market average is going to have a much more difficult time swallowing come this fall. Trades had no impact on the major market averages, even with China. It's had an issue in China, not in the United States. Big tech war, that's a whole different deal. That would bring the NASDAQ down, it would bring the S&P down. So I think that's the one we have to watch, not necessarily what comes out of Canada this week. In a global economy, you can't expect the Dow to continue to advance if you don't have the rest of the world supporting it. And if you look at the volatility in emerging market currencies, it is enough to make you sick and nauseous. Yeah, Mexico may be rebounding, but if you look across the world, there is clearly blood on the streets in Turkey and in Venezuela and in South Africa, literally blood on the streets in some of those places. So those are going to be a headwind for EM currency. You need the globe to contribute to this growth if we're going to see continued advance. The U.S. can only do it so far on tax cuts, and that's where we are right now. The concept of an emerging market is that's where the growth is in the global economy. And I think when we look at sort of U.S. growth, we look at Europe, these are still mature, developed worlds. The developing world is where the future is. And conceptually, it's easy to say that we're an island. In the late 90s, we withstood contagion, and the U.S. economy continued to grow because of technology. That's not the case today. It's much more of a global economy. That's why the China trade issue does have a contagion impact if it doesn't get resolved. I'm not saying it's not going to get resolved, but the impact we're seeing in some of these other places and the impact on currency could show up to bite us in the fall right as we get into midterm elections. So I think investors need to pay a lot more attention, not think of Turkey as a place you can go on vacation. Think of it as a place that can spread to European banks, right? Who lends the money to Turkey? It's European banks. If Europe gets in trouble, that's a whole different can of worms.
Larry.
That starts to affect the global banking system.
You know, you raised the risk around the war against big tech, which is certainly a theme, and it's only ramping up, except for the NASDAQ is trading firmly above 8,000.
No doubt.
Investors don't fear this. Why do you expect this to be a major headwind for the NASDAQ, and what would take it to that kind of level?
Look, there's no doubt when I was brought into this business and I was raised, we always said don't fight the Fed. And really the concept behind that was don't fight major policy issues coming from the government because they'll withstand you longer than you can withstand them. And I think the same is true when you have the president opposing large technology. I don't think I'm going out on a limb and saying it's a secret he doesn't like big media and big technology. But now it's becoming almost a bipartisan issue. Bernie Sanders in the last 24 hours talking about the wealth concentration, some of these companies not paying their fair share. So it becomes a very populist rhetoric on the right and the left to drum up the base into the fall midterm elections to go after these companies. And I think if you believe you don't want to fight the Fed, you don't want to fight the president where he has a vendetta against some of these companies, he is a man who has a temper and he's going to go after these companies in the long haul. You could see policy issues, and the populist base wants to see them pay more than their fair share than they're paying right now. So I worry about the major market averages. The Dow may be exempt from that. You could see Dow 30,000 within spitting distance, something unimaginable before. So I think it's not bad for the U.S. economy. It may be bad for certain parts of the U.S. economy.